All right. Today on the podcast, we're going to talk about an idea in real estate and just like when people buy houses, but it's called refinancing. If you don't know what refinancing is, we will explain it a little more, but the gist is you take your current mortgage and you get a new mortgage, pay off the old one, but hopefully with a better rate. So Josh is potentially close to refinancing. So I'm going to ask him a couple questions and I've been thinking about it as well. So we'll talk through how it works, why you may or may not want to refinance if you have a home and a mortgage and all the stuff that comes with it. So Josh, you want to explain a little bit about your situation right now?
Yeah. So when we got our house, we got it at an interest rate of 7.25, which means that over the course of the year, I'll pay 7.25% on whatever the balance is as interest. And the rest of my payment goes to paying down the actual house. So we're about a year and 4 months out from when we purchased the house, and interest rates have dropped like 0.75%.
Seven
So
quarters is a lot of quarters.
7 quarters, not 7 quarters, 0.75 was the last time I looked, but it may have changed in the last couple weeks. So if you refinance, you can reduce by that 0.75%. And depending on the size of your mortgage, that can be a big difference on how much you pay a month. So then there's this additional piece, which is PMI, private mortgage insurance, I think is what it's called.
Yep.
And it's insurance that the bank holds to insure themselves against you defaulting on your loan, but you pay it. So I got to figure out how to get other people to pay my insurance for me.
Yeah, that would be nice.
That sounds like a sweet deal. If you have less than 20% down on your home purchase, you have to pay this generally. And I'm looking at different vendors that will allow me to pay less of that because that's not a set amount. I think industry standard is like PMI equals maybe 0.5%, but that's not necessarily across all lenders. So right now what I'm looking at is comparing lenders on how much PMI and interest they will take off. And I have to weigh that against, if you refinance, there's usually some kind of fee. So it can be anywhere from a couple thousand to, which would be on pretty low end, to like 7,000, and trying to figure out where I get the best rate. So Caleb was just asking me, there's a vendor that I'm looking at that is allowing me to remove quite a bit of PMI, and the loan would be removing, I think it was around 0.5% or 0.75%, but they have a bunch of fees. So my payback period is about 2 years. So with all the money that I save every month, if I threw it towards the mortgage, then I would break even in 2 years, have paid off all the fees that they rolled into the mortgage when they refinanced, and then be in the positive after that. I would be better off. Or I can just keep the current mortgage I have and keep paying a little bit towards principal every month and not have those additional fees pile up, and maybe interest rates get better in the next 24 months or something. So that's kind of what I'm looking at right now.
Yes. One extra question I had, which I was going to ask, is what happens if you didn't put all of that extra money? Well, I guess I'll ask it differently. Have you run the scenario, potentially two scenarios? One, you don't put all the extra money that you are saving back into the mortgage. How long does that take? But then also, what if you take that extra money, put it into the market and potentially get a higher rate than whatever it would be, 6.5% or whatever? Have you run those yet?
I had considered, like what you're talking about with putting it in the market. I have considered doing that because I think that would grow it faster. I think in that scenario, it's almost always better, if you're very disciplined, to not pay more towards your mortgage and put it in the market and then later, take it out and pay off your home. You'll almost always pay it off faster that way. But right now, it's psychologically exciting to be like, oh, I paid off another month. I guess I should explain that a mortgage, the way it is made is that each month that you pay more on principal and less on interest as you pay down the balance. So right now, a couple $100 buys me a whole month of time. Whereas at the end of the mortgage, a couple $100 isn't going to move the needle at all. So I'm kind of like playing the psychological game of like, yeah, I'm buying a bunch of time with a couple $100. Man, what was your question?
Well, my question was, have you run the scenarios?
Oh,
But
yeah.
yeah, that
So
makes sense.
if I don't put the extra towards the principal that I will be saving, then it adds like a couple years to the life of the loan, but which is not terrible. It pockets me about like a couple hundred every month just to refinance, which I'm kind of tempted to do because if I should ever need additional cash flow, it's there.
Yeah.
Like you can if you have a low payment, you can always pay extra if you want, but you don't have to. So
Yeah,
I kind of like the optionality.
for sure. No, I mean, that totally makes sense. I ran the mortgage rate that my parents and people I know who refinanced during COVID had versus the mortgage rate I have now. And it is crazy the
Yeah.
difference. For me specifically, if I had the mortgage rates from COVID, like 2.99%, it's like $400 or $500,
Mm-hmm.
not more, just from that. It's so sad. But
Yes.
I have also been considering refinancing because what I want to do is turn my house into a rental and then move into a different house and have the rental and then have another primary house. And honestly, do that as many times as my wife will let me without getting mad. But what would be nice about refinancing and potentially lowering PMI if, I could find something that's a similar scenario to where you're at. Although you've paid off more of the mortgage because you've put extra. So I don't know I've just been paying what I need to pay. So I wouldn't have as much equity. But the reason that would be nice is because obviously if I have a tenant in here and I have a lesser payment, then I'll either break even or be able to make a little cash flow on the rent. So I've been running a lot of those scenarios because the problem is here where I live, some of the rents aren't super high, but because of the way my house is, I think basically I have a detached garage and I could probably rent that out as storage for 200 or 300 because there's multiple different areas. So I'm thinking if I could combine the rent from the house and the rent from potentially the garage, running that scenario, I've broken even and even made $100 a month. So we'll see what happens, but that would be very helpful if I could refinance, get lower PMI and a lower interest rate. That combined would definitely increase the viability of cash flowing the rental. So
Yeah.
that's where I'm at as well.
Mm-hmm.
One thing that I wanted to add to what you said, Josh. So the interest payment gets smaller every month as the principal pays off more. What that means is that the interest at the beginning of the loan is like 95% of the whole payment. So it's very it does not feel good to pay your mortgage at the beginning because you're paying off almost nothing. And so then you look a year and a half later, which for me it's been like a year and a half since I bought my house, and there's not that much paid off, which is tough, but it's how a mortgage works. So, and I plan on keeping this long term. I want to turn it into a rental and not sell it because I want to keep it for long term. So I'm willing to wait until it gets paid off. But yeah, it is very defeating to look at your equity when all you're doing is only paying the mortgage payment itself. So yeah, that's where I'm at in terms of refinancing. Have you what's your long-term play with the house that you're in?
Want to stay here until I die,
So, I mean, in
or
that
get
case,
too old to move.
would you say that is part of the reason why you hesitate because maybe the interest rate will go even lower and then you refinance and then want to refinance again, but then you're
That is
wasting more cash.
exactly why. Which is funny because I'm basically like wasting my time thinking about future regret. Which is weird. But that and I just haven't. My wife wanted to talk about it before we pull the trigger. We've got a couple different estimates. So like our current bank allows you to pay like a couple thousand and it's not a true refinance, but their PMI is so high that it actually makes a difference of like $100 a month. And so that's why I'm leaning towards going somewhere else. The bank I'm at now is a credit union. Just so you know, my experience with credit unions is that from a membership side, they're great to be in because they tend to be a little more conservative on what they allow as far as lending, which is great. As a member of a credit union, I want them to be very stable. As a borrower from a credit union, it's a little more like, okay,
Yeah.
let me go get a mortgage with the risky guys. Guess I'll pay less.
What would happen if your mortgage company went under?
I was just thinking about that the other day. I was like, I should probably Google that before I pull the trigger on this. Not
Because then
that
who
there's
would own
chance,
all
but
the houses?
right. Mm-hmm.
Yeah.
I assume it would be whoever then takes over like a government. If a government entity has to step in and take over the book, then it would be Fannie Mae or whatever. But I have no idea.
Yeah. We definitely should look that up because it's kind of important. Yeah. Have you ever heard of Better Mortgage?
I've heard of it. Yeah. Mm-hmm.
So I was going to do an application. For some reason, it wasn't like, I think I froze my credit and stuff, but
Yeah.
and then I unfroze it and it still didn't work. But anyways, they say that they can give you a credit qualification in 5 minutes, which is really interesting because sometimes it takes a while for mortgage companies or lenders to run stuff because either you have to go in and give some information or someone in person has to go run it. But Better Mortgage, so I don't know. I've never actually run one because it aired out. But anyways, I still want to try them if it were to work, but right now it's just not working.
Yeah.
So
One thing I will add is I went on Rocket Mortgage and it was very nice with how quickly they responded, and how quickly they gave you like I can't remember what it's called, disclosure sheet, which is not like you've not agreed to do anything. This is just our rough estimate. And the fees on that one were going to be $7,000. So I probably would not ever do that unless I absolutely had to.
That's a lot.
Yeah, it was not super beneficial. And the numbers were not, they might not have even been better than what I found at this other place or my bank. So
what were the fees at the other place?
The other place is about 5, but I'm saving a couple hundred a month. So you're looking like $2,400 or something a year that you could pay towards the mortgage, and they roll the fees into the mortgage. So that's why 2,400 times 2 is roughly.
Wait, they roll the fees into the mortgage, so you don't even cash.
Right.
Interesting.
Yeah,
that's cool.
Yeah. Fortunately, I have the cash should I need it, but yes, that was also like, oh, well, that's kind of nice. It's not a hit to cash flow.
That is nice. Yeah. So that is refinancing. And one interesting thing about refinancing is that it's a new loan, but it's not the same as your like initial mortgage. Cause I was just trying to look up a couple of different things and some things stay the same, some things change, but it is a completely new loan that replaces your old loan. And it's so interesting how different companies take refinancing very differently for people. But yeah. You got anything else, Josh?
I think that's it for today.
All right. That is the podcast for today. If you've been watching on Spotify, we would really enjoy a 5-star review. If you've been watching on YouTube, A subscribe and like on this video would be awesome. We would love to see emails from you guys, jc.unscripted@gmail.com, just for topics and things we can talk about. That's a pod. We will see you on the next one.